I would say the pandemic has definitely affected boxboard trends. Prior to the pandemic, there was kind of secular declines following the Great Recession, and we've really seen boxboard pick up with the spending growth on goods during COVID. A lot of stocking up on packaged foods, things like that really helped drive boxboard demand during the COVID years of 2020 and 2021. So folding boxboard definitely saw a lot of growth during that period. On the other side, food service and cup stock really struggled because of all the restaurant shutdowns and limited capacity. So, COVID had kind of divergent effects on those two markets. But as we look to come out of COVID times, we're definitely seeing increased spending in these boxboard markets that use a lot of folding boxboard, and then the recovery in restaurant spending should also be beneficial for cup stock and food service. Capacity changes have had a significant effect. When you look at the past decade, or really 2 decades, we've seen capacity declining in the boxboard markets with the kind of drops in demands and increased imports. Domestic production has struggled during that period. But it seems to have somewhat bottomed out, and we've actually started to see some investment in increased efficiency as well as flexibility. There's been an investment in 2 machines that can swing capacity between the SBS and CUK markets. As well, there has been a significant investment in creating more efficient CRB capacity, and that's actually going to raise capacity in the CRB markets. So the net effect of all the changes recently, SBS, because of those swing machines moving SBS capacity to CUK, SBS capacity will be down slightly, CUK capacity will increase, and with the addition of the K2 machine at Kalamazoo by Graphic Packaging, we should see an increase of about 170,000 tons in the CRB markets. With all the cost pressures we've been seeing, that's a big driver of why we've seen costs increase. There's been significant demand, tight markets, and that's really put the pricing power in the hands of producers. So as they've experienced the rising costs, they've been able to pass that along to customers. I think that's really been a big part of why you've seen prices rising so quickly over the past year and a half. As we look into the future, it kind of seems like we're seeing some easing in a lot of those price pressures. We started to see some fiber prices come down, transportation starting to ease, but I don't think we're going to see costs fall back to those pre-pandemic levels. They're going to remain elevated, and that's going to keep price levels higher. With the tight markets, it's certainly been a situation where the potential for profit or margin increases has been there, but because costs have been rising so fast, it seems like prices have been largely rising with the increased cost. Looking at a lot of the earnings calls from the biggest producers, even though they were raising prices so quickly, margins pretty much stayed flat. Maybe they actually compressed a little. That started to change in the second quarter of 2022. I think we're starting to see, as the cost started to decline, we're starting to see those margins grow a little bit. It's certainly possible that prices will be a little bit more inelastic as costs move downward. So we could see some margin gains here in the near future. But I know customers have seen their prices increase so quickly that I think there'll be some pressure. If there's any easing in spending, any easing in the market, there'll be some pressure to pull those prices down.